Welcome to another weekly review of the week of April 11. Time is flying. We are almost through the year. No, just kidding. It's half April, so it's the fourth month of the year. It's only 1/3, and we still have 2/3 to go. What happened in this particular week besides COVID-19, or not really besides COVID-19. Let's have a look at the latest developments in the European Union. We are all aware that in the United States, the vaccination programs are going very well. Also in the United Kingdom, with about almost all the population vaccinated, and Boris Johnson is opening up the country again. We see people celebrating on the streets in Soho when watching TikTok. What's with the rest of the European Union? And here says the European Union's Commissioner, Thierry Breton, that he seems to be confident, and he is confident, that also in the European Union, herd immunity will be reached latest by July 14. They are positive on the development of the vaccination programs, the vaccination speed, and we will see. We will see. Currently, Austria and Germany are on lockdowns, especially Austria. Everything is closed. People are not allowed to leave their houses, and nobody knows when it will change. What else was going on? Still COVID. What are the signs that basically we are going back to normal? I found an interesting article in the Wall Street Journal that was having an eye on that. And let's walk through a few signs. Godzilla versus Kong. There seems to be a cinema opening in the United States. And the domestic box office return was $48.5 million. So people seem to start going back to the cinemas, at least in the United States. Also, baseball is back. The picture looks a little bit like an empty stadium, but at least they are playing with some fans watching in the stadium, something that's impossible and not really foreseeable in the European Union. Another sign is big trade shows are coming back to Las Vegas. No trade shows in Europe. And Disneyland reopens, so it gives also a great perspective on the stock price of Disney, the company. These are just a few insights in the article. You'll find the link as usual on my Medium profile in the script to this video. So what else happened this week? I found an interesting article about Bitcoin. Bitcoin, everybody knows it, the godfather of all cryptocurrencies, the first of its kind and the beginning. And the funny thing is, usually startups have a founding team, a shining main founder who acts as a CEO. Let's just think about Apple, Steve Jobs, Amazon, Jeff Bezos, and what would Microsoft be without the spirit of Bill Gates, or Berkshire Hathaway without Warren Buffett. But when I look at Bitcoin, there is nobody, no CEO, nobody runs the network. And this was the intent of the group, or the person that's called Satoshi Nakamoto, that basically a system that nobody owns regulates the financial system by itself. And it works well. So far, until 2017, the last huge cryptocurrency crash in 2018, as that happened, Bitcoin was considered to be a wild illusion. Warren Buffett called it rat poison at best. And also Bill Gates avoids Bitcoin still. But there are others who promote that Bitcoin might be the new gold. It might replace gold as a store of value and probably also real estates. But can that really do it? So for the metrics, for the mathematics, what these Bitcoin advocates are preaching, it's quite simple. The maximum amount of Bitcoin that can be mined is somewhere of 29 million units. Some of them have been lost in the beginning of Bitcoin. And if everybody buys Bitcoin, there is not enough supply. So huge demand, limited supply, the price can only go up. So this is the metric. But it needs one thing. It needs people to hold on to Bitcoin. And the huge question is, are people willing to do so? Are they willing to hold on to Bitcoin, or is it more a means of trading? So I found an interesting article that discusses exactly this point. It's put together by the website The Visual Capitalist, which is highly recommendable. And they have analyzed a picture which was presented in the ARK Fund's Big Ideas report. I discussed it on my Medium profile already. It's the 2021 version. And ARK Funds have analyzed the holding time of Bitcoin. And what they found out in this graphic is that indeed people who are buying Bitcoin are beginning to hold on longer. And this might be a game changer. Also in this report, ARK comes up with the conclusion that because of that trend that Bitcoin is moving towards becoming a store of value, and high net worth individuals joining, companies like Tesla joining, Bitcoin seems to be ready also to be added to institutional portfolios as a means of diversification. So it's nothing wrong because of this high market capitalization that we see meanwhile of north of $1 trillion, that institutional funds start adding Bitcoin into their portfolios, and between 1 and 6.25% have been assumed by the ARK funds to be added in future in the next 5 years, and also by companies. And the Big Ideas report is really worth reading. You also find the links to the report and the graphic in the script of this episode. These were the developments of the week of April 11. I hope you have a good time, and see you next week.